So, thank you very much for joining us on this session, Making Sustainable Trade Flow. This is what DP World exists to do. We make trade flow. And today we've got four amazing guests that are going to help us talk about making that trade flow fully sustainable. So it's going to be a very exciting event and very free-flowing. And I want to hear, as I'm sure you do, their opinions on all things globally, strategic, and sector-orientated when it comes to trade and decarbonisation. And first of all I want to do is just take a second to introduce our panelists. So first of all, on my left, we have Bernice Lee. Bernice is a Hoffman Distinguished Fellow for Sustainability at Chatham House, and you've also been a climate negotiator, climate diplomacy? Yes, diplomacy, apologies. And so we'll be asking some very difficult diplomatic questions to Bernice. On Bernice's left, we have Bo. Bo is the Chief Executive Officer of the Maersk Mc-Kinney Moller Centre for Zero Carbon Shipping. And shipping for DP World is a significant proportion of our emissions. And we also, I believe, we have people that attend your centre as well, and they come back to the business helping us to decarbonise our business overall. We also have Holger, who's the Managing Director and Head of Infrastructure and Climate at British International Investment, who we work with very closely globally. And finally, Lord Adair Turner, Chair of the Energy Transitions Commission. And DP World Europe is joining the Energy Transition Commission in January, and we will be using that relationship not only to help drive our decarbonisation, to deliver the sustainable transition, but also help us to develop our commercial business and to think about how we can serve customers better and work within the business of decarbonisation. Because without the money, it's very hard to make these changes. So thank you very much and welcome. So to begin with, I thought I'd start with a very light question for Bernice. So we like to keep these things light-hearted and easy. So Bernice, given your experience in climate diplomacy, what do you think the recent election results in the US will mean for the climate agenda setting topic?
Well, thank you so much. To be honest with you, as a student of climate diplomacy and a rather blunt analyst in general, I find it quite funny to be called diplomatic. However, I guess in a way, times like this is time to go back to basics in some ways, to remind ourselves of important things. So obviously we know that the climate crisis won't stop, whoever wins the White House race. We know that this summer is the hottest summer. We saw all the hurricanes. We know that energy transition globally won't stop either because of the elections. Then the transition of fossil fuel is actually accelerating, right? That clean energy actually is outspending dirty energy 2-to-1. And despite the fact that nowadays realism is the new denialism, that people kept reminding us of how hard, how expensive, how slow it would be. But at the same time, we are seeing spending on clean energy far exceeding dirty one still. Global cooperation on climate change probably won't stop either. Last time, not that long ago, over 200 countries continued to work together, despite the fact that we had Trump in the White House before. And so in some sense, even though obviously if I sit here and tell you that everything would be hunky-dory and that the road to cooperation would be very smooth, that wouldn't be credible either. But what we do know is that no one is giving up, and therefore different forms of cooperation will come through. Now, at the same time, we also know that, I'm sure that Adair and others will talk about this, that green competition will continue to be an important part of future competitiveness. And any country who chooses not to do so will only be lagging behind. And that hopefully will not only spur, despite the fact that federal level may have different signals coming through subnationally, but also from companies and others, more innovation and more different types of, in terms of hearing all these wonderful sounds of the people next to us here, reminding us as well that no one is giving up putting pressure on governments, whoever may or may not have won an election. Now, at the global level, what is quite clear is that with little money going around, we have to make sure that the money we are putting into the field to invest in climate change need to deliver multiple goals. So we need to make sure that it not only deliver emissions reductions, but also making sure that it is delivering social, and in this particular case globally, it is about finding ways for countries to share the green pie because unless you find a way to share the green pie, you won't get the market access that you want. We talk a lot about what will happen to the President Trump, especially his trade policy for China, and China is now expanding its markets in other parts of the world. But China will only be able to ensure these market access if they are able to demonstrate that they're sharing the green pie as well by investing in capacities in different parts of the world. This is also true at home. Climate policies at home will increasingly mean that we can't just deliver environmental objectives alone. Not that we ever did try, but we probably didn't try hard enough to make sure that we deliver multiple objectives. Again, we need to make sure that it's not only environment and climate related, but also social as well as economically sound as well. So all of these things are reminders that the agenda actually just got bigger in some ways, and is also the leadership opportunity for anyone else who want to step into the space, which hopefully isn't just about other countries, but also other actors as well, especially businesses.
Thank you, Bernice. I certainly feel more optimistic after hearing from you, so thank you very much. And I think it's important to keep in mind that the US is not the only government in the world, the only country setting these policies. So to Bo, I'm interested to know, actually, specifically for the Mercer McKinney-Moller Center, do you and your customers around the world, has the results of the US election come to you, made you think, will there be any changes to the partnerships that you have, or do you think they'll remain as they are?
So the Mercer McKinney-Moller Center for Zero Carbon Shipping is put into this world on the basis of a philanthropic donation 4 years ago. And we work as an independent, a not-for-profit with the entire ecosystem. So we have strong partnerships in the US as well as in the rest of the world. And the way we look at the transition now is obviously that it's strongly coupled to the policies and the systems changes we're seeing surrounding ocean shipping. The way we look at ocean shipping at this point in time is that we have an industry here that over the last 4 or 5 years has gone from being labeled a hard-to-abate sector with the notion that it's probably last in line and we should probably see other sectors moving first, to a situation today where the industry has managed to converge a set of ideas to concrete measures that are now being discussed to be adopted in the International Maritime Organization next year, meaning that here's a sector with global regulatory mechanism and a strategy to go to zero around 2050. And of course that is underpinned by now an understanding that the technical solutions are possible. So over the last few years we've seen an emergence of technology solutions. We've seen the new engine and powering systems becoming available. And so on the technical dimension, you have an industry here which is ready to move. On the regulatory side, you have an industry that is really now shaping up the global regulatory framework. And on the commercial financial side, we are still in need of some maturation to understand how is the global upscaling of fuel supply infrastructure going to get started and scale up. So I would say in all of this that obviously the US election has potentially a large effect on our sector as well. But it's not like a single dominating factor in a systemic change, which we actually see as being rather robust and being driven by a lot of different regions and countries and also sectors wanting this transition to move ahead. And shipping being part of all global supply chains, it's critical infrastructure, it is the most efficient means of transportation. Shipping is in there between the countries and within the sectors of global supply chains. And it's really being wanted by many different drivers in the industry. And so the US election will not probably cause an acceleration of that, but maybe the opposite of that. But the transition is on, and we are in there with more than 100 organizations across the globe taking leadership in this on the technology side, on the business side, on the regulatory side to push this ahead. And the next big thing for us is April next year when the IMO, again with 176 member countries, with US being one of them, gathering in London to adopt the regulatory measures on on particularly the uptake of the new fuels in our industry. And so next year already will be a really important milestone in our industry, and we see a lot of support for that regulatory basket of measures really shaping up and being strong enough to drive our industry. So I think for the conversation today, I really hope that our industry will be in there as an enabler of those supply chains to decarbonize.
Excellent. And as the panel continues, I become even more optimistic. This is amazing. We'll be dancing our way out of the room with the messages we have so far. So thank you. And with that in mind, Lord Adair, actually, I wanted to ask you, we've heard what the impacts of the US results could or couldn't be, but I'm interested in hearing your view where the UK policy position could be as a result, but also what are the other opportunities globally from a policy perspective to enable the decarbonisation of supply chains?
Well, let me answer the latter question first. I mean, by keeping trade flowing, we fundamentally mean a transport system which is heavy goods vehicles, it's aviation, though it's only a small subset of aviation. Most of aviation is passenger transport, and it's shipping. And those three together, shipping is probably 2% or 2 to 3% of global emissions. Aviation is similar, but as I say, most of that is passenger, and heavy goods vehicles probably another 2%. So they're an important sector. The good news is that we know how to get every one of these to zero carbon by mid-century. I think heavy goods vehicles, to a surprising extent, much more surprising, a greater extent than I thought 5 years ago, will actually electrify. I mean, as we look at the technologies, we are seeing the weight and the distance at which you will go battery electric versus hydrogen shifting towards a battery electric solution. I think aviation, I mean, there will be a role for electric at short distance, and the real dreamers think that we might actually get to, 100-seater planes over 1,000 kilometers by 2040. But I think for now, almost always we believe that to get a jumbo jet across the Atlantic, we will need essentially just to use the precise chemical equivalent of conventional jet fuel, but to make it in a synthetic way. That may be challenged eventually by some potential extraordinary breakthroughs going on in the battery space, but I think that has to be the assumption. And on shipping, similarly, I think we will see a greater role of electrification at the sort of short-distance ro-ro level, the cruisers, picking up electricity as they go between cities. But the long-distance container and bulk will be, I think, a new fuel. And I think likely either methanol or ammonia. I think those fundamentally are the two front runners. And by the way, this is all new. I mean, 6 years ago, 7 years ago, if you'd talked to most people in aviation and shipping, what are you going to do to decarbonize your industry? They'd have said, well, we're going to improve efficiency and this will take it down by 50%, but the rest will have to be buying offsets, right? That was the predominant point of view. So we've gone through a revolution of confidence that we have technological solutions. But we still have what's called a green cost premium. I think almost any reasonable analysis of the cost of methanol or ammonia into the long-distance shipping fleet saying this is going to be a more expensive fuel than marine fuel, heavy fuel oil, and therefore the costs are going to be higher than they are at the moment. But it doesn't matter all that much. As Bo has said, shipping, one of the things that when you look at shipping is unbelievable. It's an unbelievably efficient way of moving extraordinary amounts of material across the world. And by the way, the container revolution is just one of those extraordinary things. At one level, it's not high tech, it's just a simple thing. It happened about 40, 50 years ago, and it has transformed the world. This is an amazingly efficient way of moving stuff across the world, and even if it cost us twice as much, it would still be a very efficient way. Indeed, shipping rates go up and down, 4 times up and 80% down, and we hardly see it in terms of the impact on inflation. So, in shipping and in aviation, we need to say, we are going to decarbonize these, we know what the technologies are, and We are going to commit to driving those as fast as possible, getting them to scale. With scale, costs come down. But if at the end of the day, as is likely, there's a green cost premium, so be it. But to do that, one individual country can't do it. You have to have a regulation. You have to have a carbon tax. The great thing about shipping and aviation is that uniquely, of all our sectors in the world, they have rule-making international bodies, ICAO and IMO. I remember going to see IMO 15 years ago in London when I was the first chair of the UK Climate Change Committee. And the revolution in the IMO over the last 15 years is extraordinary. I think when I first went to them and talked about climate change, there was a sort of, we were having a conversation of people on two different planets, right? They really didn't, but the leadership of the IMO of coming forward and saying, we are going to have net zero targets, we're going to use the power of IMO to get there, I think is hugely important. So I really hope the meetings next year are a success. I think IMO votes by majority. It doesn't need unanimity, does it? I think
it's normally a consensus.
It's normally a consensus, but you can make progress. So look, this is the way forward. It's hugely important. Maersk has been an absolute leader in this, but I think the crucial thing we know is we have the capability to have a global shipping industry and a global aviation industry, which is doing what it needs to do to keep the trade flows going. We know how to do that in a zero carbon fashion, and we just have to execute. Your other question, the UK strongly supports this. The UK has a target in its NDC to reduce it 81% below our emissions below 1990 levels by 2035. I can't remember whether our NDC formally includes our share of international aviation and shipping, but the climate change targets set by the Climate Change Committee do. The UK has a legal framework which in its emissions aims clearly says we recognise our share of emissions reductions, of emissions in aviation and shipping, and when we say we're going to get to net zero by 2050 nationally, that includes that share.
Thank you very much. So look, we've heard the diplomacy aspect, we've heard about the sector-specific aspect, we've heard about the policy and the transition aspect. Now we get to have the fun aspect of the money, and from Holger as well. And so, Holger, I'm really interested to know, financing the transition comes up all the time, as a discussion. So we've heard from our three other panelists. First of all, how are we going to pay for this? What do you see the sides of the investments? And secondly, keeping on the theme of some of the political rhetoric around sustainability and decarbonisation, do you think we will still keep calling these ESG investments, or will they change as a theme, and will there be blockers to this kind of investment from the reputation of ESG?
Yeah, thank you, Nicholas, for the questions, and great to be on the panel. Just briefly on British International Investment, we are the UK-owned development finance institution. We are investing in Africa and in Asia to be improving livelihoods across those continents, as well as making a positive contribution to decarbonization and the combat against climate change across those countries. So we are not a commercial investor. We are an impact investor, very much with a view to be achieving the two objectives that I had mentioned. And one of the areas where we are investing quite heavily is in infrastructure, which obviously is very much driving the decarbonization in many ways. As a subset within the infrastructure, we are very strongly focused on actually renewable energy, which in the emerging markets, which is our focus, that is where the majority of the emissions are, which, well, rightly or wrongly, is a reflection of the still relatively low level of industrialization in many of these countries. But we are also investing in transport infrastructure and ports, and we are a joint venture partner with DP World in Africa, where we have invested in 3 ports in Egypt, in Senegal, and in Somaliland, which is ultimately supporting these individual countries with the origin and destination ports. And it's quite amazing. I just want to mention that. These 3 ports over the next 10 years will be leading to an additional trade flow of over $50 billion in those 3 countries, and that will account for between 3 and 6% of GDP in those countries. So those are really important investments, which I think also highlights the need for those significant infrastructure investments to be done in a very sustainable way. Because clearly, if that only leads to economic growth in the old-fashioned way, that ultimately takes us in the wrong direction. And I'm very pleased to say that with DP World, we have a very strong partner that is focused on the transition globally, but also specifically on the ports where we invested. So we have 5-year decarbonization plans, which is looking across the range, so equipment efficiency as well as process optimization. Great to hear that there's going to be sort of sustainable fuels available, as well as potentially whatever then is remaining as carbon offsets. And that is obviously a great place to be, because with responsible partners like DP World, and obviously supported by people like us, we will be seeing the transition bottom up actually taking place. You need the frameworks, you need the technology at the macro and the sector level, but then you need to have the players come along to do this. Now, in terms of financing, as a development organization, we are providing equity, we're providing debt, long-term debt, but we are also providing, and that maybe goes to the point of how we're going to fund this, also speaking to the point that Lord Adair had mentioned, there is a premium here to be paid as compared to more emitting alternatives, and that is the same across the range. That's in energy the case, that is the case in transport and ports, and that, I think, at this point in time does require some kind of subsidy and support. And that is in a way what we are providing by being more patient investors, but also by making available some subsidized funding that will allow some of the investments that might not be economically viable on day one to be made, and then over time, obviously, I think they will be paying off. One example, other than the relationship that we have with DP World, is another port investment we have in Gabon, where we provided a resource efficiency facility for $2.5 million to build a solar plant plus battery storage on the port itself, so that it does become self-sustained with regards to power, and then also sustainable along those lines. But all of those investments at this point in time do require some sort of a subsidy and support to cover that value gap. And I think it's great to see that it doesn't always have to come from public sources. Increasingly we are seeing long-term thinking and strategic investors like DP World, but also others, Maersk and other international organizations, that do take the bigger picture view, and they do absorb those additional costs in their business plans and in their investments, because they do know that over time investment strategies that will not be contributing to the transition and the decarbonization will not be sustainable, neither at the asset level nor then at the company or at a sector level. So that's very sort of positive. Maybe just a final point that I would mention, we are also supporting alongside the Asian Development Bank a program on green trade finance. Because in many emerging markets, trade finance is not as readily available as it is in developed countries. And so we have jointly set up a facility to provide trade finance specifically focused on transition goods. So this is around export-import of renewable energy equipment, or anything that is then sort of related to the supply chain, to make sure that the trade aspect of that is not ultimately coming in the way of emerging markets being able to continue to invest in the transition. Because unfortunately, as much as investment is flowing into this theme, and it was mentioned 2 to 1, there is definitely a stronger focus on some countries. China, I think, is the biggest one. Unfortunately, many emerging markets are falling behind. And they're the ones that are really needing to invest more, because that's where economic growth is very significant, as well as the conversion of existing infrastructure needs to also be addressed. So you have basically a horizontal and a vertical transition that needs to be funded, which requires actually, relatively speaking, even more capital as compared to the developed world. But yes, those are some of the instruments that we are making available.
Excellent, thank you. So next question, first I'll go to you, Bo, and then to you, Bernice, okay? So Bo, really interested in hearing more about your experience on cross-sector collaboration that you do at the Centre. We're particularly interested in hearing your views on how can we enhance sustainable trade initiatives, how can we overcome bureaucratic burdens, hurdles, and also what about industry hesitancy and where they're being held back on not necessarily which fuel to go for and things? How can we collaborate better to be more effective?
Okay, thank you very much. So obviously you're asking some really good questions as to bureaucracy and administrative burdens. I think the view we have taken on that is that we need to get going and we need to work with partners who are ready to move and demonstrating how it can be done. And then alongside with that, work with the upscaling. Does this work? It works, yeah. Work with how this is going to scale up in time. And take this off. And so one of the initiatives that is really gaining a lot of traction is what we call the green corridors, is where we try to connect the entire ecosystem of leading countries, leading companies, wanting to be part of this, wanting to lean in. So we connect supply chains, could be a mining company in Chile, with developers in Chile, with the Chilean authorities, with ports, with ship owners, and with the off-taker like a Japanese EV manufacturer wanting copper. So you can imagine trying to get this whole new system, so reimagine that business system and get it going. And that initiative called the Green Corridor has gained a lot of traction. So we have 15 of those projects going now around the world. And it's really fascinating to see how you can speed up the process of across that chain in this initial phase. Of course, at the same time as doing this, we need to think about how is this then going to scale up in the longer run. It's like the establishment, for example, of the railroad system in the beginning. You saw individual pieces of railroad emerging here and there, and at some point in time, it became a cohesive system of those individual components. So I think the way of doing it is to lean in and get those initial projects going, and we need public-private partnerships to do that. At the COP29, we had the so-called Clydebank Declaration, where a number of countries signed up to start doing this. And those corridors are now emerging. They are materializing as demonstrators to how this can be done. If you take, for example, our work with Namibia now, it's also a very good opportunity to triangulate development needs, social growth opportunities in Namibia with energy policies, for example, Europe wanting clean energy. So climate policies, development policies, and energy policies really coming together in very nice ways. So demonstrate that, and then at the same time work on the upscaling. And upscaling here means that there are a number of standards and regulations that need to be in place. And of course, EU is showing the way in many ways with fuel for maritime and shipping in the ETS. So EU is showing good leadership here, but we need to make that scalable to the global level. And this is where the developments in IMO now is playing a key role, because many of those learnings are now being transferred to become globally applicable standards. For example, on how do you certify the future fuels, how do you build ships, how do you handle the new fuels like Lord Adair mentioned in the ports, how do you handle, for example, toxic ammonia in port and city environments, etc. And so you see a whole new set of standards being shaped up at the same time as these demonstration projects are really getting the business going. So I think that's a pretty fascinating interplay between public-private partnerships demonstrating that it's possible, and then the global upscaling practices and standards also emerging.
Excellent, thank you. Just aware, Lord Adair does need to leave at 16:40, so I'm going to ask Bernice this question, and then Lord Adair, I'd love your answers to the same question actually as well. But first of all, Bernice, so we've heard about cross-sector collaboration, business collaboration, but we're also seeing more of an isolationist narrative now from nations around the world. How do we ensure we maintain free trade flow and sustainable free trade, keeping in mind the sector collaboration needed, but also the isolationist narrative that's coming through in some governments?
Thank you. I think it's a great question, because I ask myself that question every day, especially when you follow discussions in the WTO sometimes. At the same time, what is quite clear, though, is that despite all the tough talk, trade continues. Secondly, even though in some countries, including ours, sometimes free trade deals are seen as a blood sport, it's about numbers. But actually what we are realizing now increasingly is that it isn't just about size or numbers, it is actually also about quality. So in some ways, as I said earlier, if this awakening from the US is indeed about the fact that we actually have to try to deliver it all, it will be the same for trade as well. There were many brilliant books written many times about why trade wars are class wars, for example, that trade has a way of magnifying social weaknesses in our social fabric. And this does mean that politicians who can't really figure out a good way to redistribute what are very diffused benefits from trade need to indeed find better ways to deliver them and making sure there's a central priority. So in some sense what I'm arguing is that, well, actually, free trade can continue if it delivers quality, good quality of life for people, including higher volumes of low carbon goods, as well as living standard improvements. And we hear a lot this COP actually, that is no longer just about telling people that you're delivering benefits. We have to make sure that people actually genuinely feel them. This lived experience is now what is increasingly emphasized as a way, part and parcel of any delivery. So this is as true for freer and better trade, which means that we would have to emphasize quality, not just quantity. And ultimately, the comparative advantage is not the law of physics. And we heard a lot about finance and a lot about different types of interventions. Indeed, these are things that societies can create together. And I think unless we manage to do that and recognize that if the law of physics indeed is not that, or comparative advantage is something we can create and create benefits at the same time, then I think that we could, in fact, make sure that, or make a better case for keeping trade freer. Now, I'm not entirely sure that this argument necessarily works in the US tomorrow. However, building a case for better living standards and better trade is the only way we can possibly move. Thanks.
Thank you.
Well, this is a hugely important issue, and it is the one on which the Energy Transition Commission, which I chair, is having its meeting tomorrow focused. So if anybody wants to come along and discuss this issue at the Climate Action Zone at the Marriott, what's called the Marriott Boulevard, tomorrow morning at 10:30, please do come. Here's the essence of the challenge. We have a set of technologies where we have seen over the last 10 years, well, even longer than that, and we are continuing to see, cost reductions and performance improvements far faster than we dreamed were possible. These are technologies like solar PV, batteries, both EV batteries and storage batteries, which are now collapsing in cost. EVs themselves, increasingly also electrolyzers. And what has happened is that economists have talked for years about how once you get scale, you get economy of scale and you get learning curve effects, learning by doing, and down come the costs. And it's happened. But we have a challenge. It has primarily happened in China. Every one of the technologies which I mentioned have been technologically led by China, and in all of those products, about 70 to 80, or even in some cases 90% of all global production is in China. Now, in a world of complete geopolitical peace in which everybody was happy, this is, what's the problem? China produces these incredibly cheap solar PVs, which are a simple plug-and-play project. They're put into TEUs, containers, they're shipped around the world, you take them out, you've got solar PV, what's not to like? But countries say, no, but I want some local employment. I want to have local value added. I don't want to be reliant on one country. And so you have these bits of strategy that say, I will not be more than 50% reliant on any one country, where everybody knows that any one country meant one country in particular. And the US has that as quite extreme now, and it's going to get more extreme, but the European Union and the UK have it. What we are proposing at the ETC, and we will publish next year on this, is a set of principles to step through this debate and to try to make sure that while meeting the legitimate demand requirements of, say, Europe, to try and have some of the supply chains in Europe with the employment creation that comes with that, we don't give up on the benefits of this amazing economy of scale effect which we are seeing in China production. I can reveal tomorrow what the principles are, but they include things like distinguish between different products. Bluntly, for the European Union to try to now create mass manufacturing in solar PV by levels of subsidies is going to be like pushing water uphill. Don't do it. Just buy those Chinese PV panels as rapidly and as cheaply as you can. On the other hand, electric vehicle manufacturing plants and battery plants tend to stick together. When you want to locate a battery plant, you typically put it, if you happen to be on the board of a battery company, the best place to place a battery plant is about 500 meters from an EV plant, because they're pretty heavy things, and we want the links between the different steps in the manufacturing process. So to a greater extent in EV manufacturing, we probably can make sure that Europe has some of that business, but there's only one group of people in the world producing cheap EVs for the masses right now. They're the Chinese, people like BYD. So let them build factories in Europe. Focus on location, not ownership. So we have a set of proposals of how we step through this. We need to get this balance right. If we just say we buy from China, we will get a political backlash against the employment consequences of that. If we simply say we're going to have 100% autarky and try and do everything just in the US and everything just in Europe, we will significantly increase the cost of the energy transition. But there are a set of principles, there are a set of ways to strike a balance and end up with a win-win here. And if you want to know what those are in detail, come to the Climate Innovation Action Zone at the Marriott Boulevard at 10:30 tomorrow morning.
Thank you, Lord Adair. And I know you need to leave us early, so I'll leave you to that. Bernice, I know you want to come back on a couple of points, and Holger, I'm going to come to you for a couple of questions.
Thank you. Yeah, I was just thinking that I think you and I are speaking at an event at Adair tomorrow at that times. But I was going to say that I think that obviously we are looking at an environment where the question of speed and cost becomes extremely important. But at the same time, knowing that we are not likely to become one world again anytime soon, or the one global market again anytime soon. What we can do is to invest in, obviously, cooperation, but also interoperability. So I think that the whole idea that I would like to find out more about the principles that was being discussed. But at the same time, is also the fact that if we can figure out a way to develop technology standards in such a way that becomes much more plug and play, so that when the world wants to become one market again, we could actually scale up again, because I think I am genuinely worried about losing the ability to scale at speed in the way that we did before, and as a result of which contribute to the kind of cost reductions we were talking about. Thank you.
Thank you. Holger, I mean, first of all, I'd love to hear your views on that from the investment side and the way you view these things, because you mentioned earlier about some of the great projects that you're investing in, especially in the global south. And yesterday, someone from the World Economic Forum said that there was the investment in the global south is only about $22 billion a year in sustainable solutions. So, first of all, I'd love to hear your views on what Bernice has just said, but also, what do you think are the investments that you would like to see coming through over the next 10 or 15 years to address issues in the global south as well?
Yeah, well, the numbers are shockingly low indeed. I had sort of previously alluded to this, and that has to be sort of a cause of concern, in particular, as in those countries, as I said earlier, the public support, like the IRA, for example, is just not feasible. So, this is where, I think the global community is asked for, and this is indeed an environment where that is not in high demand, or at least it's not really coming through as much. So with nationalist agendas, I think the joined-up support for the global south is going to get weakened. I think that is certainly the case. But I think there's also some bright spots, maybe just leading on from what Lord Adair had mentioned with regards to production, for example, in the transition industry, which is coming through. We are seeing a lot happening in India, for example. So they are building an industry on solar panels, and they are, at the moment, it's more manufacturing, or also just, buying some imports from China, but they are sort of vertically integrating, and I think it's a matter of time until they will have built a very significant industry along those lines. We're seeing this happening in South Africa as well. And so I do believe that there is going to be a trend of having more decentralized production, not just one place. And arguably China is at the moment very cheap, but I suppose many of us appreciate that that does come with implications, not only economic, also social implications and environmental. I mean, a lot comes down to very cheap coal that is being burned in Xinjiang, which is in itself an environmental issue. So, I mean, from a global south perspective, I mean, there are opportunities in that as well. And that is partly what I had mentioned with regards to the manufacturing sort of locations that are sort of diversifying, as well as, and I'm sure many know this here as well, a lot of the ingredients for the global transition are coming from the global south. I mean, 70% of cobalt is coming from the DRC. Now, unfortunately, the DRC doesn't really hold much value in that because it's mostly extracted and then it's being shipped off. And so I think regarding sustainability, we certainly have to make sure that the transport, the shipping and otherwise has to be sustainable, but sustainability has to go beyond that, which is that you have to sort of localize manufacturing, at least processing. You have to retain some value in those countries to ultimately make it a fair transition in the way that it doesn't all get then sort of shipped off to China or be it in the West, be it US or elsewhere, rather than there's more value that is being left on the continent to make sure that ultimately there is an improvement of livelihood across the board. And so those themes, they do pick up pace, and they're getting increasingly politicized. I mean, particularly in Africa, there is a race between, I think, some powers. China has been very active on the continent. We are seeing, in particular, from the US, there is a very strong sort of impetus around sort of building back better following the pandemic, but also on quality infrastructure, which in principle is very positive. But that ultimately mustn't come at a cost of increasing cost of a sort of production unnecessarily, but certainly it mustn't come at a cost of to the detriment of the countries where ultimately products are coming from or ultimately are needed. So it's an environment which is getting more complicated, but as I said, there's opportunities and challenges at the same time coming out of the global south, and that is where, I mean, we are supporting certainly on the opportunity side for them to be supplying the north with green hydrogen, for example, with regards to green power. You know, we just earlier talked about the X-Links project, you know, going up from Morocco to the UK. So I think there's a lot of opportunities that come with that on the back of the sustainability drive, which ultimately is going to be economically interesting and will create new opportunities if they have a fair chance to extract the value that is due to them.
Excellent, thank you. Well, we're in the last few minutes now, so I want to give our panelists an opportunity to answer one question, and that I'll tell them the question before I tell them who goes first, just to get a bit of time to think. So what one thing do you think we could do, or would you want to see, that could make sustainable trade flow sooner, or make it more sustainable? And Bo, you're giving me the best look, so I'm going to go to you first. And then I'll go to Holger, and then finally to Bernice.
My answer to that is very clear. If everybody from this COP went home and told their governments to send delegates to IMO next year to support the measures that are being discussed at the moment, a global fuel standard, a life cycle-based way of assessing the climate impact of those fuels, and some kind of economic measure, carbon pricing mechanism. It has all been defined in there. We just need to adopt it, and it's ready to go. Then you have ocean shipping enabling all global supply chains to decarbonize. So that would be the one thing. So tell your home government to support the developments in IMO, period.
Thank you. Holger.
Yeah, well, whilst we are sort of on telling governments what they should be doing, I might just add that, leading on from what I said just now, we must not think nationally in these issues. We really have to think globally. And so it is absolutely critical that the notion doesn't arise or gains any currency that, whatever we do at home, like, some countries first and others, is actually going to be a winning proposition. Rather than, the growth in the last decades has been driven very much on trade. And that we must not lose out of sight. And that we have to absolutely see as a value to all countries, rather than trying to optimize one over the other, because all the beggar thy neighbor responses which might be coming down the pike. And I'm afraid, again, looking at it from the global south perspective, that will be the part of the world will be suffering strongest and most first. Hence, I really would petition for people to maintain that sort of global perspective, which ultimately is going to be beneficial for everybody.
Thank you very much. And finally, Bernice.
I live in London. you can't open a restaurant down my street because of public acceptance question. So the whole idea that we can move businesses and factories back to Europe and US without with the kind of social acceptance, I think it's really quite challenging. This means that whether we like it or not, we will need to trade. We'll need to trade a lot more stuff that we need sustainably. At the same time, I think building on what is being said as well, knowing that we are not in a luxury position of only delivering one thing at a time, this means that we will have to deliver multiple objectives. This also means that ultimately to make sustainable trade flow faster or more sustainable trade flow faster, it's always about going back to doing the right thing. And unless we do that, I mean, sorry to end on such a boilerplate statement, but when doing the right thing is the only right thing to do, will be exactly the answer here, because otherwise I can't really imagine having more backlashes that we've seen, which actually will end up, standing in the way of progress even further. So, as always, there are no magic bullets. But knowing that if we don't deliver at all, the backlash could be worse, may be the only answer. So, doing the right thing.
Excellent, thank you. Well, look, we have come to the end. That's literally the moment I said the end, it hit 50 minutes, and that's the precision of logistics you see right there. First of all, I want to thank the panelists, and Lord Adair's not here, but all our panelists for the incredible contribution they've made, the discussion they've made. The points were practical, pragmatic, but most of all, optimistic. And I think what's wonderful about this is that we can all leave here today knowing that there are solutions. We do believe in them. We believe the global system will support them. And I think this is the message I'm taking home from COP as well. Businesses want this. This message, the idea that businesses don't want it and our customers don't, it's not true. We do want it. We're seeing this from everybody. And the direction is clear. The question is, how do we accelerate the momentum? So at DP World, we make trade flow. And we believe in making sustainable trade flow, and I'm very pleased that you could be a part of this discussion today. So thank you for taking the time, and thank you all for joining us.